Guys, it's Stock Curry, and before we even get into today's video, I want to remind you guys that Monday is a federal holiday here in the United States. This is the very first year that Juneteenth is a federal holiday. If you don't know what that is, Juneteenth is the last day that slaves were freed in the United States. So the very last slaves were freed on June. So we celebrate this Juneteenth holiday. And this year, Monday, the markets are going to be closed the very first time. And, for here on out, the markets will be closed on Monday for Juneteenth holiday. So next week is a 4-day trading week. And if you open any options on Friday, just keep that in mind that you will have 3 days worth of theta decay since this is a 3-day weekend. All right, let's move on to some market news. And then what I want to do is talk about your trades and, we'll discuss the markets and talk about, whatever stocks you guys want to talk about. We'll go through and analyze them and everything. So starting here, stock futures are up a little bit. But what I really want to point out here is that the stock market is on track for the worst week since March of 2020. This week is exceptionally bad. One of the worst weeks we've had in years. And I like this story because it kind of summarizes a lot of things real fast. So we'll just go through it. Obviously, the markets were down significantly today. Several key pieces of economic data fell short, ranging from May retail sales to housing starts. And of course, the federal bank raised the interest rate by the most since 1994. All of it was bad. This guy, Jeremy Siegel, says we are in a recession. He says it's a mild recession right now, not quite an official recession yet, but he honestly believes the first half of the year is going to have negative GDP growth. By the way, we're going to get that GDP number in just a few short weeks here. So we're only, I think, about 5-6 weeks away from finding out if we are currently in a recession. So far this week, the S&P is down 6%. All 11 sectors are down at least 15% below their highs. And the Dow fell below 30,000 for the first time since January of 2021. The first time over a year, it's below 30,000. The Dow by itself is down 4.7% for the week, on track for its 11th negative week in 12. Ouch. And of course, NASDAQ is always down even more. It's down 6.1% for the week. All right, that is the market recap. Let's talk about this because, Adobe, they released earnings and they beat expectations, but forward guidance was not good. The stock is 5% after hours. Just not good for them. And, we've seen this over and over and over again of these companies that are lowering guidance and lowering guidance and lowering guidance. And what can I say? It just keeps going on. It's never going to end. But remember, as we enter a recession, there's two things we get. We get layoffs. And then remember we talked about the zombie companies, those companies that are unprofitable and that they are, don't have enough cash in hand to weather a recession. Remember we talked about that? Well, what happens during a recession to companies that aren't profitable and don't have any cash? Well, let me show you what happens because there we go. They file for bankruptcy. And Revlon is the first major company to file for bankruptcy during this recession of 2022. So they're the first ones to bite the dust. They filed for Chapter 11 bankruptcy on Wednesday, saying they had too much debt, and they, blamed it on the supply chain, of course. So long story short, they're the first major consumer-facing business to file for bankruptcy protection in what has been a year-long pause of distress in the retail sector. Let me be very clear. This is not going to be the only company that files for bankruptcy. We're going to see more and more and more of these as time goes on. So the very beginning, it's just the start. And I am convinced that over the rest of this year, we're going to be talking about a lot more companies filing for bankruptcy. Okay. This news actually, this sent a lot of these quote unquote zombie companies uh, down significantly today. A lot. And I'm sorry, I forgot to log into Webull. So let me just pop that up real fast. Here we go. All right. So, by the way, let me just show you one in particular we've been watching. Talk about crypto too if you want to. That's pretty bad. Rivian is one that Elon Musk said was going to file for bankruptcy. They're down 9% today. A lot of them that Revlon news, people kind of woke up, was like, whoops. And the other one that Elon Musk said would file for bankruptcy is Lucid. They were down 11% today. It's bad, guys. It's really, really bad. So that's, the summary I wanted to show you guys. That's literally the recap I've got for you. Short and sweet. I'll go ahead and show you guys the $1 Million Challenge portfolio. Started with $3,000. We're at $6,300, up a little over 100%. Certainly nowhere close to $1 million. But then again, when we started this challenge 6 months ago, I told you guys we'd have like probably a better chance of getting struck by lightning than actually hitting $1 million. But I said, even if we come far short, and we are far short, at least we'll make a lot of money. And so we are up over 100% on the challenge so far. Today, we were up over $1,000. So we actually had quite a bit of losses yesterday. We just made back some of those losses today. Just wanted to let you guys know, kind of where we stand on that in case you guys aren't in the Discord and you were wondering what the update was on that. So what we're going to do now is just go ahead and get into your trades and talk about them. And if you'll just give me 1 second, we will go through and take a look at your comments. And I will get Ortex pulled up here and logged in case you guys ask about any short squeeze stocks. That way we get the information for you guys. Let's see what we got for comments today. Have you ever found a tornado? Yes, I have lots of tornadoes I found. For those of you guys who don't know, my hobby is storm chasing. I just got back from a storm chasing trip about 2 weeks ago. We did not get a tornado on this past trip. There's something called a CAP or SIN, convection inhibition. Anyway, it basically stops any storms from forming. So no tornadoes this trip, but we'll get them. All right, yes, let's go. Throw some curries in the chat, guys. I'd love to see it. Wow, you're just going to kickstart it with like every company, huh? Well, we'll talk about a few real fast, okay? And first of all, let me be clear that Apple's PE ratio, their forward PE ratio is still 21. And I hate to say it, but if you go back like 10, 15 years, that is still historically high. Apple should be down around 10 to 15, probably closer to 10 by the time the market hits a bottom. And of course, in order to do that, it would have to lose half of its current value, more than half. What does that put Apple at? $60 a share? 60, 65? Yeah, I know. It sounds insane. It would never, ever happen, right? Well, we got pretty strong support here at $81. We got more very strong support at 56. If I'm going to guess, I'm going to throw this out here. It's going to be like a 2-year prediction. And guys, again, let me be very, very clear that when I make these predictions about where stocks are going to bottom out, I'm literally talking about the bottom, guys. That's going to be 2-3 years away. So that's going to be my prediction. That support line right there, $56.59. That is where I think Apple's going to bottom out by the time this is all said and done. Scary, I know. Tesla, I think it's going to fall even more. I honestly believe Tesla is going to get down to this range right here. I know you guys can't really see this on the screen. Let me call out these numbers. This bottom line here is $335. This top line here is $461. I think we are going to bottom out somewhere between $335 and $461. Most people think Tesla's going to get below 400. Let me just go back here a few years and kind of show you back in 2020. You can see the very strong support and resistance here in this channel. So that's the line, guys. And I know they've been, great company, a phenomenal company, incredible, forward growth forecasts and all that stuff. I get it. Problem is their forward PE ratio is still 52. And as the economy slows down and as the future earnings projections decline, and they will, you're going to see the stock price decline as well. And my guess is we're going to bottom out somewhere around $400. So, yeah, I know I sound crazy. I get it. You guys don't believe me. I know, but we'll see what happens. I don't know, man. NVIDIA, I haven't looked at this one in a while. Wow, we are at really strong support right now. Very strong support on NVIDIA. I'll just go ahead and draw this line. This is really, really strong support. We'll pop that guy right there. And there you go. Right at it. Really, really, really strong support here. The problem is, it's very bearish. So what do we got after this? Kind of hard to say. Yeah, definitely got a line right there. Let's chart it. And right about there. And just in case it gets worse, let's go look at forward PE on this guy. 28. Yep, that is not going to last. That's not going to last. Depending upon how bad the bear market gets, this looks like a really strong support resistance line. Let's go ahead and draw that. And that puts us at $78.67. I'm going to go ahead and call that the bottom for NVIDIA as well. $78.67. What else do you want to talk about? CLF. CLF, I love this stock up until a few weeks ago. It was my best performing stock this year. Now it's not. But that's okay. It'll come back. Forward PE ratio, 2.9. Yeah, this thing is way undervalued. Way, way, way undervalued. I don't know. It's a falling knife. I don't even see good. Well, I guess, yeah, we kind of got some there. But obviously, this is going to be one at 15.84. This is going to be one around $13 so-ish. But the thing is, look, when you guys, these are the kind of stocks you want to buy. So forward PE ratio of 2.9, extremely undervalued. Go look at the financials. Are they profitable? Yes, very profitable. Do they have more cash than debt? $35 million in cash on hand, $2.6 billion in accounts receivable. No short-term investments. So forget the inventory. Inventory, I mean, that's if they sell it. But overall, you're looking at about $2.7 billion. And let's go take a look at debt. We got $5 billion in long-term debt. And short-term debt is zero. Accounts payable, $2.27 billion. So the long-term, kind of like the inventory, that'll be a wash. The $2.7 billion in assets minus $2.3 billion in accounts payable, that gives you $400 million positive. So this company is $400 million positive. They're profitable, and they have a PE of 2.9. This is a buy all day long. This is a buy. And what's the last one? BNGO. Okay, BNGO. We have no, we don't have a forward PE ratio. Why don't we have a forward PE ratio? Because they're not profitable. They never have been. They're losing money every single quarter, always have. Absolutely a company you want to stay away from in a recession. This is a zombie company, by the way. When I say zombie company, you're looking at it. Cash and cash equivalents, $24 million. Short-term investments, $192. Combined, that gives us $215 million. Accounts receivable, $5 million. We'll call it $220 million. Let's go look at their debt. No short-term debt. Accounts payable, $6 million. Brings us down to about $215. Long-term debt, $3 million. Not bad. Okay, so this company is doing just fine on debt. Let's see if they're issuing any stock in order to Make that happen. 15K, nope. Bonds, nope. Paying those off. So this actually BNGO isn't quite as bad as some other stocks. The reason being that they have a lot of cash on hand. And so what we're going to do is go look at their essentially like a cash burn rate, if you will. What we can do is come over here and look at their net income, negative 30 million. If you take their total here, so what I want to do is their net was about 205. We'll divide it by the $30 million cash burn. That gives them 6.8 quarters. Divide that by 4. That gives them 1.7 years. Pretty much gives them enough cash to weather the storm through the end of 2023. But they are not yet profitable. So they have enough cash on hand to make it through the end of 2023. So long as the recession ends before then, they might be okay. But with them not being profitable, they're going to get beat down and hurt by value investors. Okay, so that's all that. Hopefully that helps a little bit, guys. Yeah, so then what's going to happen tomorrow? Dead cat bounce? I don't know. Here's the thing. I really thought today was going to be green. I was pretty shocked to see it be as red as it was. You know, this market is so volatile, it's almost impossible to predict. So here's what I'm going to do. I'm going to grab my little colored clicker. And, okay, it's red. I'm going to predict a red day tomorrow. I just figure if I predict a red day, we'll have a green day. Worked yesterday. Yesterday, I predicted a green day. We had a massive red day. So today, I'm going to predict a red day for Friday. Hopefully, we have a green day. Little reversed psychology on my predictions. Why not? There you go. There's my prediction, okay? I'm going to predict it drops so that it'll go up. Look, guys, I don't get all my predictions right. I'm not a prophet. And I certainly don't get all my trades right either. I just want to be real clear about that. I do not get all my trades right. We had a lot of losing trades this week. I'm going to tell you that right now. And we still made money. You don't have to win every trade. Nobody does. Just try to win most of your trades. Oh, gosh. Most famous zombie companies. All right. You guys ready to get mad at me? Oh, go ahead and do it. Let's go get mad at me. Why not? Go and subscribe. I don't care. AMC. Let me just show you why. Profitable? Nope. They do have $1.1 billion in cash on hands. Very good, by the way. We don't have any short-term investments, but $1 billion in cash on hand. Long-term debt, $5 billion. They have 5 times as much debt as cash on hand, and they're not profitable. This is the definition of a zombie company. I know. You guys hate me. I'm just speaking the truth here, guys. You guys want to unsubscribe, that's fine. But I'm not here to make you feel good. I'm here to tell you the truth so you can make some money, and then you can feel good about making money. How about that? Okay, let's see what else we got. AQST, why not? What is AQST? What is this? Aquestive Therapeutics. I'm sure I pronounced that perfectly. What do you guys want to know? Let's see here. No money. Not profitable. Zombie company. I got a feeling though. Let me go pull up tip ranks real fast. We're logged in. No, that's fine. Let me just plus AQST. Oh yeah. So here's the thing, guys. See this $9.80 price target on AQST? So this would be one of those companies. It's like a pharmaceutical company. If they get the FDA approval or whatever, then it goes up. If they don't, then it goes to zero. It's a gamble. My rule of thumb with any pharmaceutical company is buy 10 and just hope to get approved. The other 8 are going to zero. That's how I play those. That's how you make money. Same with penny stocks. Buy 10 and just hope the 2 skyrocket, and they should make up for the other 8. All right, let's see what else we got here. Yeah, Tesla was almost at bankruptcy too. And look, yes, you're absolutely correct. Major difference. Tesla was not at bankruptcy during a recession. Tesla was able to continue to raise money. During a bull market, companies that are losing money are able to continue to raise money. During a bear market, the liquidity dries up. And that's what drives companies into bankruptcy when they're no longer able to make money. So that's the big difference you guys have to understand. I know for most of you that have been trading, we haven't had a true prolonged bear market since 2008. It's been, 14 years since we've had a true prolonged bear market. And this is very, very, very different from what we've experienced over the past, say, 12 years since 2010. Very different market. A lot of companies are going to go bankrupt. A lot. Yeah. Okay. Here's the thing. LCID. You guys say you think they're going to survive because they have the money back up. So again, it's all about raising funds. So if Saudi Arabia is able to give Lucid more money in order to help save them, then yes, they will survive. Same thing with CCL, right? A lot of people completely forget that Carnival Corp, CCL, received a ton of cash during the March 2020 pandemic. And the number of shares on CCL doubled during that time. And a lot of people made the major mistake of thinking that CCL was going to get back to pre-pandemic levels, completely forgetting about the fact that the number of shares doubled. So even if CCL got up to half of pre-pandemic levels, valuation-wise, it was at pre-pandemic levels. So can anybody from Saudi Arabia save a company? Absolutely. They did it with CCL. They can do it with Lucid. Like I said, it's all about being able to raise cash. If you can raise cash, you're good. One that we have a put option on is RIVN, Rivian. We got a put option on Rivian, RIVN. We are up 24% on that put option right now. And let me point out, we've had to be really, really patient with this one too. This was a huge lesson of patience for people in the VIP Discord over the past few weeks. Notice it's up 76% today. Well, we're only up 24% from open. And prior to today, we were down. Because here's the thing, a stock like this is very hard to predict day to day. So on LCID, what you'll notice is we were like up here somewhere, and I'm like, okay, cool. All right, I don't even remember where. Somewhere in there, we bought that put option, and then it kind of rose up. I think I don't remember where I bought it, but anyway, it may have been back here. I don't really recall off the top of my head, but it rose up, a little scary, but then it, luckily the 10-day, 21-day EMA rejected, and now it's going back down. Now we're up. But the point is, you got to be right. When you have conviction in a stock, I don't care if it's a stock going up or a stock going down. If you have true conviction and the fundamentals are backing you up, and your conviction isn't limited to some YouTuber hyping it, but when you have true conviction, you've done your research, just hold. It'll turn around. It'll get back up, but you're gonna have to be patient sometimes. What did you say? You're still holding the QQQ option at 285. I don't know if you're talking about the put or the call. If you're asking if Q is going to go high tomorrow, you're probably talking about the call. Yeah, no. Well, you think QQQ is going to go up 10% tomorrow? No, not going to happen. Nope. No. I dumped it today at a like 95% loss. Like, I don't know. It's no. Moving on. Talked about that. Thank you for the curries, Richard. Really, really appreciate it. You're awesome. Okay, let's talk about this a little bit. Government going to crash the market during midterm elections. So historically, during a mid-year election cycle, historically, the market will bottom out in October and it will rise in November and December. So if the stock market follows what it historically does, we're going to bottom out in October and we're going to see a big rally in November and December. Now, no guarantees that's what's going to happen, of course, but that's historically what happens. Let me get back to QQQ real fast. I want to show you something technically. QQQ, by the way, for you guys who don't know, is a NASDAQ 100 ETF. So look, it's pretty bearish on the daily and all this stuff, right? The weekly is really bearish, but the weekly is oversold in the RSI. The daily is pretty close to oversold, not quite there yet. The 4 hour dropped down to oversold before rising a little bit in the last hour. And I wanted to point out this right here, and I'm trying to make this as big as possible. So there we go. Okay, hopefully that's big enough for you guys to see it on the screen. So this bottom orange line here, $268, is a support level that goes back like 2 years on QQQ. And this blue line here is a downward trend line on QQQ. And they met, technically they'll meet tomorrow, but the candle today hit the blue line and the orange line and then bounced off. This is a really strong sign that we are going to hit very strong support here. Now, do I think QQQ is necessarily going to go up that much? I don't know. It might trade flat. But do I think QQQ is going to go down any further? No. I think $268 is going to be a floor on QQQ for some time in the future. I don't see QQQ dropping below $268 for a while. So I don't know. Maybe we'll open a credit bull put spread on this. We'll sell a credit bull put spread, which will make money so long as QQQ stays above $268. That's probably a good idea. In fact, Friday would actually be a good day to open that because we'll get 3 days of theta decay helping us out. So yeah, I think we're at a market bottom right now. I really, really do, just based upon the technicals. So hopefully that helps you guys out. Thank you, Darius, for more curries in the chat. Really, really appreciate it. You guys are awesome. Oil stocks. You know, I think oil's pretty much hit its peak. I mean, what else do we have to really make oil go up? We've everything's already factored in. You know, the war and supply chain, it's all factored in. I don't see anything that would really cause oil to go up that much more. I think it's topped out. Good question. What about buying gold in a recession? So gold goes up when the value of the US dollar declines. With inflation being sky high, that has caused the value of the US dollar to decline. It's really inflation that causes gold to go up. Now, gold did go up during 2008 because people jumped into it as a hedge. But again, in 2008, the entire financial system was collapsing and people are jumping into gold thinking the US dollar was dead. That's not the case this time, right? People, obviously the economy sucks, but the dollar itself is stabilizing. So I wouldn't be surprised to see gold stabilize. I don't know if it'll go down, but I think it's going to stabilize for the short time being. If you want to buy and hold gold, that's okay. But it may even be riskier than cash, honestly. So I don't know. You know, normally gold will go up during a recession, but only if people think the dollar itself is under threat of being devalued. And with the sky high insane inflation we've had already, I don't know how much more market sentiment there is to believe that the US dollar will be further devalued. All right. Thank you, Des, for the curries. I really, really appreciate it. You guys are asking about Neo. Let's go look at NIO. All right. Neo financials. Losing money, losing money, losing money. And we've got $2 billion in cash, $5 billion short-term investments, total $7.7 billion. Another $500 million accounts receivable. I'll call it $7.8 billion in cash. $7.8 billion. Short-term debt, none. Accounts payable, $2.3 billion. So 7.8 minus 2.3 is 5.5. $5.5 billion. And then accrued expenses. So that's another 4.2 billion. Long-term debt brings us down to 2.5 billion. So, they're at $2.5 billion, $2.5 billion net cash positive. They are, let's see, net income, 281 million. So 2.8 divided by 2.8, that's 10 quarters. And 10 quarters divided by 4, 2.5 years. Neo has 2.5 years of operating expenses in cash on hand. So long as the recession ends by the middle of 2024, Neo is going to be just fine. However, as a stock that is losing money, the stock price might continue to fall as it gets beat up by value investors during a recession. So the financials are not good, but the fact that they have enough cash, they should be able to weather a recession. And plus, they've probably got the backing of the Chinese government to give them however much cash they need. So the only concern with Neo is, are those financials real or are they lying? A lot of Chinese companies lie about their financials, so you've always got to take Chinese financials with a grain of salt. Good question. Could you stop buying and only do long-term shorts in companies with high PE ratios? Yeah, that's a valid strategy. And there's a lot of people that are doing that and are making money. That is absolutely a valid strategy. Yes. AMD. Let's go take a look at AMD. Whoops. No, we broke below very strong support today. That's extremely bearish. Let me just go ahead and draw your next support level for those of you guys who are wondering. Whoop. Actually, surprisingly, a little higher. Right about here. And that puts us $73.99. PE ratio of 18. Not too shabby. Still a little bit high, but not aggressively high. Profitable company. 4 or 5, call it $5.6 billion. And another, $10 billion altogether. Short-term debt, none. Accounts payable, 1.6. I'll put it as 8.4. Minus another 2.1, 8.3, 6.3. Others, 1.5. So 6.3, 5.8, 4.8 billion. And another 1.4, so 4.8 puts us at $3.3 billion in net cash, and they're profitable. Very, very strong company financially. Love the financials on this company. A little bit high in the PE ratio. So, I think just because of the fact we're in a bear market, it'll continue to drop. Assuming the bear market gets really bad, this looks like a pretty nice, strong support level or right here. Let's go ahead and draw this and see what we got. $59. And let's see what that would end up being. If we do 59 divided by 82, Current PE of, what did I say? 18.6. Oops. Come back here, calculator. There we go. What is a PE of 13.3? That sounds right. So my guess is AMD will bottom out at $59. I think AMD will bottom out at $59, but very, very strong company financially. And these people are going to be just fine. They're going to weather recession, no problem. But I do think just because of the fact that we are in a bear market, we're going to bottom out at $59. And again, guys, this is my guesses. I'm not a financial advisor, right? I'm just guessing based upon technicals and fundamentals. You know, nothing I talk about today is a recommendation to buy, sell, or hold anything. So just take everything with a grain of salt, guys. I'm just a guy on YouTube. This is a stream for those of you wondering. Yeah, I don't think I've ever done a premiere, FYI. You're very welcome, Des. Glad I could help you out. Let's see what else we got. Can I look at F and estimate the bottom? I assume you're going to talk about the stock F and not just F the whole stock market. Let's see what we got. PE ratio 5. Okay. That's low. Oh, they lost money last quarter. That's a bad sign. It's a really bad sign. We'll go the yearly. Okay. They had a big bump because they're F-150 Lightning, and now they're dropping again. Yeah, this could be, you don't want to see this. You don't want to see any company losing revenue as we go into a recession. That is very, very bad. So I get why they have a PE of 5. The market is projecting that they're going to continue to lower guidance and lose money. Let's take a look at their balance sheet. 21 and 20 is 41. Accounts receivable, 41, let's see, 54. Other receivables, okay, 54, 56, 86 billion. And then what do we got? We got no debt. 86 minus 23 would put us at 63. 63 minus 14, 59, 49, 49. 49 minus 3 is 46. 46 minus 16 is 30. And 30 minus 87 is negative 57. So they're $57 billion in debt and losing money. Nope. I cannot predict a bottom on this one. It's going to depend upon how bad things get for Ford. There is no telling. This is a company that is strong right now, but as the recession gets worse, the outlook for this company is going to get worse. Not one that I would be investing in at all. If anything, leap puts maybe. So I'm sorry I can't estimate a bottom on that one. It's just the financials are changing to the downside, and it's impossible to tell. It just depends on what they're able to do with the cash they have on hand. Hood. Robinhood. Okay, fine. We'll look at Robinhood. I can click on the right stock. Okay. Losing money. Balance sheet is 6 billion, 400 million, 6.5 billion. Plus 5, 11.8 billion. And minus 7 billion. Is that 4 billion? What else we got? A few hundred million there. I'll call it 3.7 billion. Okay. Yeah, they're not. So 3.7, how much you losing? 390, you got about 8 or 9 months, or 8 or 9 quarters rather. All right, a little over 2 years. It gets them through about the middle of 2024. I don't know. I know they're laying people off. They're losing money. Uh, it's kind of a zombie company, but the plus on Robinhood is they have a lot of cash on hand, but they're losing money, and the amount of money they're losing is increasing every quarter. I I don't know if I would necessarily do a put option on it, because it's so beat down already. It's impossible to value a company that's losing money in a recession. Impossible. So I have no idea. It's just definitely I wouldn't be long on it. I'll put it to you that way. COIN, kind of the same boat here. They just did a bunch of layoffs. I think they laid off like 10% of their workforce. Well, they were making money up until last quarter. And the fact that they're doing layoffs means they're not getting any better. So kind of like Ford, they were looking good. Now they're looking bad. Let's go take a look at cash on hand. $6 billion. No investments. Plus 10 billion receivables. Call it 16 billion. And what do we got? No debt. Good. Payables, minimal. Accrued expenses, that's fine. Still 15.5 billion. Other current liabilities, 10 billion. Okay, so that puts us at 5 billion. Long-term debt, 3 billion. Puts us at, 1.5 billion. Okay, so $1.5 billion cash on hand, but they're starting to lose money. And if they continue to lose this, they're going to be out of money in 3 quarters. At the beginning of next year, we'll still be in the recession. So not looking good for Coinbase. Not looking good, guys. I'm worried about this one. I'm worried about it. Current P, 4.9. Yeah, it's low enough, but I'm worried about that one. All right. Thank you so much for the queries, Matthew. Appreciate you. See what else we got. We talked about that one. Yeah, we talked about that one. See what else we got. Talked about all those already. Okay, you want to talk about the Redbox squeeze, RDBX. Anybody even go to Redbox anymore? I mean, just fundamentally, if you still go to Redbox, put it in the comments. I'm curious. RDBX. First of all, I personally am not touching any squeeze plays in a bear market, but we'll pull it up for you guys. I'm not even going to look at fundamentals. They don't matter. This is a short squeeze play. Doo-doo. And utilization. Nope. Right there. Still 100%. Nobody shorted. Short interest of free float, 228%. Is that for real? Y'all serious about this? Like worse than GME. Where's statistics? Sometimes we have a yep. This always happens. Always, every single time this happens. So let me blow this up a little bit bigger for you guys. See the shares outstanding, 12.6 million, and applied shares outstanding, 45.4 million. Okay. So this is actually, how do I say this? This is a mistake by retail investors. Retail investors have got this one dead wrong. The market cap is 147 million. Okay. Do a quick math for you. Market cap 147 point what million? 147.51. Gosh dang it. 147.51 million. Share price closed at 1169. $12.6. Interesting. Shares outstanding 12.6. Okay. Well, Webull used to have the correct 45 million. Now they got the 12.6. But this implied shares outstanding. So Red Blocks RDBX, they were done through a SPAC, like a reverse merger. And so in rare cases, the number of shares outstanding gets misreported. The actual number of shares outstanding is 45 million. Now, if you take that and we take our actual the number of shares. Number of shares alone, 3 million. Okay? 3 million shares on loan. Shoot, even if 3 million shares on loan. Okay, so it's saying free float is lower. But here's the thing. Let's just do the $12 million number. 3.48. And we'll just go with the 12 million just to show you guys. Divided by, get back over here. 12.6. Guys, that is a 27% short interest. And I get it. A lot of people just look at this. They're not doing their own research. I hate to say it, but this is just wrong. It's wrong because of the way the shares outstanding was calculated. I talked about this in the VIP Discord. I tried to explain it in the VIP Discord. And I get it. It looks like it's worse than GameStop. It looks like this should squeeze to the moon. It's bad math. That said, I don't know what retail investors can do. They could probably run this thing up to $30. I don't know. But do I think it's going to short squeeze? Who knows? But I'd say the reasons for trying to cause a short squeeze are wrong. That said, it could still happen if enough retail investors get behind it. So let's go look at the average days on loan. Where is it? On average days. Thank you. Average days on loan is 37.04. Let's go pull up Webull. Now I got to do math. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. 1, 2, 3, 4, 5, 6, 7, 8, 9, 20. 1, 2, 3, 4, 5, 6, 7, 8, 9, 30. 1, 2, 3, 4, 5, 6, 7. Whoa! Oh, man. Short sellers paid an average of about $4 for this stock, and it's at $11.69. Short sellers are down 300%. Good job, retail investors. Great job. Great job. Your reasons for this are all wrong, but it's brilliantly executed. Brilliantly executed. Man, I have no idea what's going to happen or where it's going to go, but that is awesome. That is awesome. You guys know Melvin Capital already went out of business. Let's go make it another one. Why not? Great job, guys. That's all I got to say about that. Let's move on. SoFi, let's see what we got here. All right. Getting close to my buy-in price. Yeah, we don't really have much information on SoFi yet. You know, this is technically another zombie company. It's my personal Dark Knight, but it is a zombie company. So if you invest in it, make it super small. It is a trash stock, but I'm just, you know, that's my Dark Knight. what do we got? Disney. What is Disney? DIS. Okay. So I remember very, very clearly saying that Disney was going to get back down to $100 a share, and everybody said I was crazy and stupid and I had no clue what I was talking about. And we're here. So I'm going to tell you what I said months ago, that once Disney got under $100 a share, that'd be my buy-in price. Disney is literally at my ideal buy-in price right now. It is at my ideal buy-in price. Forward PE of 23 though. Why is that? Because they're lowering their earnings expectations. So the PE ratio on Disney is actually going down. I'm sorry, the PE ratio is going up as the earnings expectations go down. And I warned about this in a couple of videos ago about how that kind of works. Yeah. So, this is a strong company financially. Not as strong as I would like to see, but with the amount of profits they're making, I mean, they're fine. But if their earnings continue to go down, Disney is at risk of becoming unprofitable. And if that were to happen, we could drop even further. That said, it is at an extremely strong level of support. Unfortunately, the PE ratios come down. Let's say extreme bear market. This is another very strong level of support. I'll draw it. If things continue to get worse for DIS, we could be looking at $68 a share. $68 a share if things continue to get worse. We'll see. We'll see. Let's see what else we got. I talked about all those. Talked about most of those. Yeah, again, I think the markets have bottomed out for now. I think we're going to get a little breather here. I don't think we're going any lower than we did today. Thank you, King, so much. Thank you for saying you like my channel. I like the fact that you're here. Thank you so much. Yeah, my pleasure. Glad to help you guys out. Let's see what else we got. Yeah, my pleasure. Glad I could help you guys out. Trying to see if we got other ones. Let's talk about this. This time is different. In any recession, there are always going to be different factors, but the results are always the same. Housing market is now the most unaffordable in history. Yes, worse than 2007. Worse. You're right. This time is different than 2008. It's worse. In 2008, we didn't have sky-high inflation. We weren't facing stagflation. This is way worse than 2008. This is very similar to 1970s. 3 recessions in 10 years and a drop of 80% in the stock market. As I talked about in yesterday's video, the Fed has lost control of inflation. They've admitted they cannot get inflation down. It is impossible. And yeah, not good. Not good. Thank you so much for the curries, Mark. Really appreciate it. Thank you for the curries, Oscar. Appreciate you. Bank stocks. Let's just talk about bank stocks real fast. So normally, during a time of rising interest rates, bank stocks skyrocket. Are bank stocks skyrocketing? Well, let's go take a look at FAS. Nope. Bank stocks are dropping, and they're dropping fast. So what's going on? Why? Well, the problem with banking stocks is their number one cost is employees. And what's happening with wages right now? They're skyrocketing. As wages continue to go up, that hurts company earnings. So unfortunately, the bank stocks are crashing because their earnings are dropping significantly because the cost of their wages is skyrocketing. So unfortunately, profits are going down with the banking stocks. They're going down. Let's just wait for this wage growth to kind of settle out. Unfortunately, inflation is overshadowing the rising interest rates right now. Until the rise in interest rates becomes greater than the rise of inflation, banking stocks will continue to go down. Once the rise in interest rates exceeds the rise in inflation, then banking stocks will start to go up. So if we get to the point where interest rates are 5% and inflation's at 4.5%, that's the turning point. That's when bank stocks start to go up. All right, let's go talk about a few more. Talked about AMD. We'll go talk about FB, Meta. Nope. It's META now. So just a heads up, we have a bearish position on META. Credits bear call spread that has a max profit if META is below $180. Simple to say, we are deep in max profit territory on that one, but it doesn't close for a few more months. But regardless, I think we are going to hit max profit on that. I feel pretty confident on that guy. Technically, we got some, well, no, we don't. Yep, here we go. So we got some support down here. Right about there, $122. $122. And I have a lot of concerns about Meta right now. You got key executives leaving. You've got their future supposed to be Meta, and now they're pulling money out of that. It's bad. It's bad. They are in trouble. It may not be showing up entirely in their financials yet, but trust me, they are in trouble. So that's why we open a bearish position on them. Is I don't know what's going on. We're going to find out in a few months, but whatever it is, it's bad. So down 30%. Yeah, you got more to go. PYPL, another fintech like SoFi. Whoa. Just breaking below every support level, aren't we, PayPal? Let's see what we got here. Nope. Yep. Well, close. Close enough. We'll call it there. All right. Not real strong, but pretty close. All right. Where are we at? 80. No, it's not 86. What is? Yes, it is. It broke below that one too. What in the world? Is there any support left? Anything at all? Or is it just going to fall forever? Okay. Yeah. Let's go see what we got here. Where are we at? $72. We're below that. I got nothing. I got nothing. All right. We got support at $44. If that makes anybody feel better. Not me. That looks pretty bad. That looks really bad. That chart sucks. Let's go look at the fundamentals. Okay, they're profitable. Yay for profits. Cash 4.3, call it 8 billion. Give it another billion, 9 billion. Okay. And short-term debt, nope, good. Accounts payable. What? You got $9 billion in cash and $40 billion in accounts payable. Another $8 billion in long-term debt. $42 billion in accounts receivable. Holy crap. They're in trouble. They're in big trouble. Wow. They're doing stock buybacks. Why? Why would you be doing stock buybacks when you're almost out of money? And you're issuing bonds while you're doing stock. What are they doing? Why? No wonder the stock is dropping. P of 18, still high. TTMP 23. Yeah, they're going down to at least 44. At least 44. I don't know, guys. We might open a put option on this one. I'm going to make a note. I might open a put option on that. UIPL put option. Give it about maybe 2 months. $44 price target. I don't know what PayPal's doing. Let's move on. Okay. All right, fine. Let's get into crypto. Let's do it. ETH. USD. Oh, so close to being under 1,000. We're at $1,013. That's about as close as you can get. Okay. Like I said, guys, $775 is the next support level below this. And then we got really strong support at 620. And I don't know what after that. Let me be clear about cryptocurrencies for a minute. Let me be very clear about cryptocurrencies for a minute. Below that, 446. Cryptocurrencies are not a store of value. Okay? Let me say this again. I don't think you heard me. Cryptocurrencies are not a store of value. They run up with the overall stock market and they fall with the overall stock market. As the stock market continues to go down, cryptocurrencies will continue to go down also. This stock market will continue to go down. So unless you have a way of shorting cryptos, I would just wait. Again, just my opinion. Could be wrong. Let's move on. Man, I'm so far behind on the comments. I got comments from like an hour ago. Let me speed this up, guys. I don't know what I'm doing over here. Let me see if anything sticks out that we haven't really talked about that you all love. Zim. Let's do it. ZIM. That's a chart. Okay. Are we at support? Not quite. Close. $46 would be support. $46 support level. And financials, extremely profitable. PE of 1. Okay, well, so far this is a strong buy. Cash, call it 4, almost 5 billion. Yeah, that is $6 billion in cash. Okay, $6 billion in cash. No debt. $3 billion in accounts receivable. Bring us down to $3 billion. At 600, 2.4 billion. Minus 3 billion. So negative 600 million. Who cares? They are so profitable. So insanely profitable. With a PE of 1. How do you not invest in this company? How do you not invest in this company? Like, this is a no-brainer. So far, the 2 stocks that are buys right now are ZIM and CLF. That's it. Yeah, that is the best stock that we have analyzed in the last hour. The best stock. All right, talked about all those. Let's see what else we got. Y'all really asking for Dogecoin? Let me just say something about meme coins. %80 of cryptocurrency tokens will be gone by the time this crypto winter is over. 80% will be gone, never to be heard from again. They'll be shut down. Be very careful if you're putting any money into crypto right now, and make sure the usability is so strong, you know for a fact that they're going to last through a major crypto winter, like for the next 10 years of no growth. Be very, very careful, guys. Very careful with cryptocurrencies. 80% of them will be gone within 10 years. What else we got? What else you guys want to talk about? Yeah, Palantir. A lot of people talking about Palantir. PLTR. Oh, okay. Well, stock chart sucks. That's yeah, stock chart sucks. Big falling knife. Fundamentals. Losing money, losing money, losing money, losing money. Let's see what we got for cash. 2.2 billion. Short-term investments, 252 million. 2.5 billion. 2.75 billion. $2.75 billion in assets. And no debt. Very good. 27 million accounts payable. It's nothing. Interest, 129 million. That's nothing. Call it. Okay, bring it down to 2.5 billion in cash. Long-term debt, 0. So you got a company that's not profitable with $2.5 billion in cash. This should be fun. $2.5 billion in cash. A million? No, it's billion. No, it's million. $2.5 billion in cash. Losing 101 million a quarter. 24 quarters of cash on hand. 6 years of cash on hand. So this is one of those stocks. They've got tons and tons. 6 years worth of cash on hand. Look, they're not going anywhere for at least 6 years. Now, could the stock price continue to get beat up during a recession because they're not profitable? Yeah, absolutely. You can't value a stock that's losing money. But with $2.5 billion in cash on hand, it better be a market cap above what the cash on hand is. And right now, market cap is $15 billion. So, yeah. You know, I hate to say it. Very strong balance sheet, but the stock price probably still way too high and will probably go down a lot during a recession. If Tom Nash, if you're watching, I'm sorry. Let's see what else we got. Talked about that, talked about those. Guys, I know it's a long video. I'm sorry, but most of these stocks we already talked about. So, you know, when we're done, just go back to the beginning. Oh, yeah, sorry. I'm terrible at promoting my channel. Go hit the like button, guys, and subscribe. And, I don't know, click a bell icon or something. Thanks. Appreciate it. Talked about. No, we did not. We did not talk about CHPT yet. Let's do it. That's not CHPT. That's CHPT. Yep. Scary chart. Financials, losing money nonstop. Balance sheet, 500 million. Call it 600 million. All right. $600 million in cash. No short-term debt. 35 million. That's nothing. Okay, so call it 500 million. And long-term debt, 300 million. $200 million. So they're $200 million cash positive. And they are losing $90 million a quarter. They have 2 quarters left. They will be out of money by the end of this year. Ladies and gentlemen, CHPT, we have another zombie company. They could file for bankruptcy next year. Good chance CHPT will be filing for bankruptcy next year. I I would not be owning it. I might be shorting it. Let's see what else we got. Okay, we haven't talked about airlines at all. Let's do it. AAL. So airline stocks are dropping right now. And gasoline prices are going up. Sadly, when it comes to airlines, gasoline prices going up is bad because people buy their tickets before the airline flies. So people are buying tickets with a certain gas price priced in. And then when the plane actually goes to fly, the gas prices are a lot higher. So airline stocks are losing money every single time fuel prices go up. Airlines lose money. And this company is losing money heavily. Heavily. I mean, it's getting worse and worse and worse. Excuse me. Ugh. Sorry. I think I'm allergic to all these zombie companies. Ugh. All right. What do we got? I've got $300 million cash, $12 billion in investments. Call it $12 billion. Another $1 billion here. Okay, that's 13 plus 14 billion dollars in cash. No debt. That's good. $3 billion in accounts receivable. 14 months is 11 billion. Expenses of 5.5 puts us at 5.5 billion. Other current liabilities 11.5. 5.5 minus 11.5, negative 6. Long-term debt 35. Negative 41. Company is losing money, and they're $41 billion negative on their balance sheet. Yeah, zombie company all the way. Strong chance that AAL files for bankruptcy very soon. Very strong chance they file for bankruptcy very, very soon. Yeah, terrible stock. Would I do a put option on it? Maybe a leaps. I don't think I would do anything shorter than that just because it's come down like so much over the past few days. It probably needs to rebound up here to about $15 before I would do a put option. But yeah, awful company. I a strong chance they're going to file for bankruptcy. Talked about. So what else we got? Nope. Oh, thank you so much, Brad, for the super chat. Really appreciate it. Love you guys. Thank you so much for joining. Love you. Talked about all those. Talked about pretty much all those. What is this? All right, let's talk about it. Based upon the time frames you were given for the stock prices, it seems like you're planning for this bear market to possibly last until 2024 later. Is that accurate? I don't know. If you look at the average bear market, lasts about 18 months, year and a half, middle of 2023, on average. We're 6 months in. On average, the bear market will last another year. I don't know when it ends. Nobody knows when it ends. But historically, we're still in the beginning. So, hope that helps. Well, how long do I see buying opportunities in the market? You know, the further the market goes down, the more buying opportunities there are going to be. But I would limit your buys to those stocks that are extremely undervalued. I'm talking PEs of 2 or less. We found 2 in today's video, CLF and ZIM. I would limit my buys to stocks that have PE ratios of 2 or less because this market is going to hurt. It's not going to get any better. Thank you, Oil, for the kind words. Appreciate you. GLDG, we'll talk about it because I promoted it, so I've got to talk about it. Look, just gold in general. Okay, gold in general. is, I don't think it's going to go down anymore. But like I said, it's probably going to be a little while before it goes up. It's going to be one where we have to be patient. But generally, as interest rates rise, gold goes up. So be patient on it. I told people in the VIP Discord that $1.11 would be my buy-in price on this. $1.11. So we're still a little bit above that right now. But yeah, $1.11 is where I would buy in. So and you can see on this chart, we have very, very, very strong support at $1.06. It's still undervalued. I just know how this stock trades. PE 2.26. So PE of 2.26, extremely undervalued. Great stock to buy into. They got plenty of cash. They have no revenues, but it doesn't really matter. They're an asset holding company. So, you know, this is one that I still love. I think it's great. All right, talked about that. Rashid, thank you so much for the $20 super chat. Thank you so much. Thanks, Scott. You brought me back. Let's get the paper. Thank you so much for the words. Thank you so much for the $20 super chat. I really, really appreciate it. Oh, let's talk about this real fast because a lot of people get confused by some things. I'm going to pull up I'm assuming the 1 minute chart here. So big green candle. Are you talking about this? I don't know. That could just be buying. I mean, it's not that big of a green. 0.5%. Not even. It's like 0.3%. I don't know. Could be a lot of swing traders just loading up, thinking the market's going to go green tomorrow. But it looks like a big green candle. It's really not. All right, guys, I'm really going to have to wrap this up here. I got some family business I got to get to. So let me just see if there's anything else super important. Make sure I'm not missing these super chats or anything. See what we got. Let's see what we got. Want to make sure I'm not missing anything super important. We're wrapping it up, guys. We're wrapping it up. Just wanted to let you guys know. Thank you guys so much for joining us, by the way. Don't forget to hit the like button and subscribe because, like I said, I appreciate that. And what else was I going to say? Oh, yeah. I guess I should just promote everything. I don't know. Guys, if you want to join the VIP Discord, get in on some trades with us, that's the link for the VIP Discord. If you're curious, like, you know, what we did today, where's my Twitter? I know I posted this on Twitter. Profile. And, oh, look, there's me. Oh, yeah, this guy. Woo! This was awesome. Awesome. Guys, I may have predicted the market wrong, but I traded it right. We made a 225% profit on a QQQ put that I bought last week. I bought this on 6/10, which was what, Thursday? And paid $5.10 for it. Sold it today for $16.61. A 225% profit. Guys, if you want in on these trades, come join us. We're making money. I may not get the predictions right all the time, and I don't get every trade right, that's for sure. But I get most of them right, and we make money. So come join us. Love you guys. Thank you so much for joining here on the channel. I hope you guys have a lot of success trading. Remember, Monday, the markets are closed. So any options you open Friday, you're going to have 3 days of decay on that. And probably best to sell options on Friday and not buy them. So just keep that in mind. I love you guys. I can't wait to get back with you guys on Tuesday. And hope you guys have a lot of success trading. We will see you on Tuesday.